Wall Street finished with just modest gains today, but don't let that fool you. The stock market's major averages are very quietly closing in on new all-time highs. In fact, the S&P and the Nasdaq have now closed higher for a fifth straight day as investors continue to be cheered by reports that a U.S.-China trade deal is near, even as they brush off more and more soft reads on the economy. Today, the Dow rose by just 39 points. We're now at 26,218. The Nasdaq added 46 and the S&P added 6. Pisani takes a look now at this slow yet choppy march to new highs.
The early gains were fueled by higher hopes for this week's U.S.-China trade talks. China's vice premier meets with U.S. officials in Washington today, and reports are saying the two sides are getting closer to a deal. We've heard this before. The markets don't necessarily need to see a done deal to rally higher. They do need to see clear signs of concrete progress happening. Technology and material stocks led the way higher. There was a whole bucket of semiconductor names that rallied on this China trade talk optimism. So you have names like Advanced Micro and NVIDIA, the Broadcom. They all had a nice pop today, and they all have heavy revenue exposure to China. About half their revenues come from China. Broadcom is the most heavily exposed to that group. The Dow, the S&P, and the Nasdaq, they're all now less than 2% from all-time highs. It's not just the major averages that are inching closer to record territory. The sectors are as well. So technology and consumer discretionary stocks, they're 1 or 2% away from their old highs this year. And healthcare is just about 4% away from that mark. But a couple of key catalysts could turn the tide in the coming days, including the March jobs report, that's on Friday, and the official start of earnings season. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.